Hello, this is the Trades at U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 31st of July, 2017, ending Friday, the 4th of August. So Monday is the last day of the month, which means statements print Monday. It's still the summer. Statement print day is usually a dead day unless there's some major excitement out there. I would imagine Monday is not going to be the most interesting day. And we are entering August, which is, I feel like, on average, better than July. July, to me, is very flat. A couple decent days, and that's about it. Early in the month, usually. And that's about what we got. I mean, the last 2 weeks have been really flat. We had, I think I saw, if I remember correctly, 7 out of 10 days in a row where the S&P was up or down less than a point. I mean, that's just unbelievable. So, things should start to pick up after this. We've got the... Well, it may not be in August, but hopefully it'll be better than July was. Let's just put it that way. Here's the ES front month futures contract, daily chart of the S&P 500 in futures form, which is the proper way to look at the market. Not much need to say there. There's a 9-bar startup phase that's complete, but that's not a complete sell signal. Let's go through the major indices. Crude oil back up. It's been on a roll here from 42 back to 49.70 for the close. 42 earlier in the middle of June. It's up 66 cents on Friday alone. Gold up $7.70. Gold's also been on a tear. S&P cash index, like I said, down 3, which is almost flat. And by the way, it opened about there as well. NDX down 8 after opening lower, so it came back a bit. Look at that big outside day down on Thursday, though. SOX down 4, never made new highs. Biotech's up 24 on Friday. The VIX closes up 18 cents to 10.29. Remember, we spent a lot of time under 10 recently, and that is not good for the market. Just so boring when that happens. Trend at 1.45 takes the 10-day moving average back to 1.14, which is the high of the last month for the 10-day moving average. NASDAQ volume, 1.87 billion shares. That's a big dip versus what we had seen earlier in the week on some of the earnings numbers. And there was earnings Thursday that should have caused volume on Friday, and then the GDP number, but nothing really happened. Advance decline ratio on the NASDAQ, negative 82. That means 82 more stocks were down than up. Advance decline ratio on the New York, plus 237. Google gains $5.82. Hasn't made a new high yet since back in May. Apple down $1.06. Amazon took the hit, down 25.96. Netflix up $1.36. None of the big ones made new highs. This is the first time in a while. Tesla up 61 cents. Got the TLT up 73 cents. That's the 20-year bond ETF. Goldman Sachs up $2.13. This thing's been stuck since back in March and down for the year. All right, let's take a look at the futures, and we'll go to 10-minute candles and look at the whole week and see what we got here. So, Monday, flat opening, little dip, came back, closed flat. One of those days where he closed up or down less than a point. Tuesday, gap up, pulled back. That first 30 minutes was the range for the day. Again, it's so flat, and then you just close, down a little bit from the opening level, but up for the day. Wednesday, gap up a little bit, a couple of points, close flat. Another day where you close up or down less than a point. Thursday's where the action was, gapped up, sold off, and then just basically stuck in a range for about 2 hours, and then we broke finally, and that's when we made a chunk of money on a bunch of stock calls. Huge decline there, and on the S&P here, it's only 25 points, which not even that, which you wouldn't even usually count as much more than just an average day. But we finally got it. And then on Friday, just so you can see, gap down, and then very late tried to make a climb back up. The reason I point this out is because if you look at the NASDAQ side, the decline on Thursday was much bigger. It was almost 150 points. That's why we did so well on Thursday. It makes the whole week when that happens. But what about the weeks where it doesn't? Disappointing. All right, let's take a look at the economic data coming out this week and reset this for next week. So we're going to look at what we're going to see all week long here in the U.S. On Monday, 9:45 a.m., so 15 minutes into the market, Chicago PMI, pending home sales 30 minutes into the market. On Tuesday, personal income and spending, PCE prices an hour before the bell, ISM index and construction spending 30 minutes in, auto and truck sales at 2 p.m. Eastern Time. On Wednesday, we got the MBA mortgage applications index at 7 a.m. Eastern Time, ADP employment change at 8:15, and crude oil inventories, that's the weekly number, an hour into the market. On Thursday, Challenger job cuts 2 hours before the bell, initial and continuing jobless claims an hour before the bell, ISM services and factory orders 30 minutes into the market, and the natty gas, that's the weekly number, an hour into the market. The big day is Friday, where we have both the unemployment rate that comes with non-farm payrolls and trade balance, two huge numbers Friday morning at 8:30 a.m. We're still in summer. Hard to say what we get, but like I said, I generally, as a trader, have over the years have preferred August over July. I think July sometimes has a good start when it's this first start of the second half of the year, and sometimes there can be a good move out of that, but then it dies off. August, on the other hand, to me, a little bit more positive in terms of opportunities, even though some of the big people are obviously on vacation. And then September, we get really back to work and start trading more like normal on average, is usually what happens. But we've had a couple Augusts that have been just crazy. So let's hope for that. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week to start